Okay, what's going on, everybody? How's everybody doing tonight? Can I get a mic check and a visual check in the Zoom chat as well as the YouTube chat? Yeah, I'm not expecting I'm not expecting too many people to show up a couple nights before Christmas, but it's still something to do, you know? So hopefully you guys can see right on the screen the chart, and on the left side the real-time news headlines. If you guys are new to the stream, just want to make sure some people come in here before we start doing our analysis across pairs, as well as everybody make sure the audio and visual is all good. We're going to be discussing some of the current fundamentals that are at play, reflecting on some trading psychology, doing some analysis, looking for some scalps and trades through London session. We'll be doing analysis on gold, GBPJPY, EURUSD, USDCAD, US30, even GU, as well as looking at investor behavior, market sentiment, price action, market structure, and just developing and growing our chart hours, as well as providing value to the YouTube audience and to the Zoom audience, and keeping ourselves busy during this lockdown life. Are all of you guys on lockdown? My area is going on lockdown on the 26th on Boxing Day. So I got to squeeze as many gym days as I can. Yeah. But for those of you, obviously, who know, we're coming towards the holidays, coming towards Christmas. We're coming towards the end of the month as well as the end of the fiscal year. So this is usually a period in time where a lot of investors start sitting on the sidelines and prepping for 2021, cashing out of positions. So yes, we're going to be doing our analysis as we normally would, but as traders, our job is not just to do technical and fundamental analysis. Our job is also to be very adaptive and reactive to the real-time markets and understand market timing and use that in our favor. So sometimes the best position is no trading position, especially when you're coming to a period where volumes can be fluctuating. Like what I was talking about, you can see a lot of investors on the sideline cashing out of positions, getting ready for 2021. And there's a lot of, just in our specific situation, usually from a seasonal perspective, let's just say if we have 100% regular economic conditions, meaning we don't have any crazy pandemic markets, the economy is somewhat healthy or neutral. Usually in those types of market environments, this end of the year, coming towards Christmas and New Year's period, is usually very optimistic. There's what's called the Christmas rally, right? Most of the time, consumer morale and confidence around this time is a lot higher. So you have an increase in spending, increase in consumer inflation, retail sales, stock markets usually booming at this time, and then you see a sell-off, sorry, as buyers start to cash out their positions before the end of the year. Now, obviously, this year we are seeing something similar with the optimism, especially on global stock markets, and we'll take a look at that as well. But with the pandemic markets, with Brexit still active, there's a lot of potential for uncertainty as well. And this is creating some intraday ranges that buyers and sellers are playing in, right? So we're going to be looking at first gold, then doing some analysis on GJ, EU, the other pairs, like I said. But before we jump into that, let's just make sure we understand some of the key fundamental points from a macro and micro perspective that are currently at play. So if you have not heard, the 900 billion, basically $1 trillion stimulus for American citizens have been approved. It's going to be less than previous, but at the end of the day, this is just financial aid and debt being printed by the central bank, given to the government to dish out to the citizens. This is showing that there could be potential more uncertainty going into 2021, and we aren't regarding COVID, and we aren't done with COVID just yet. There was a different COVID-19, there's a max vaccine rolled out globally from Pfizer, Moderna, in the US, North America overall, like Canada, US, and some South American countries as well. In Europe, you're hearing a lot more headlines about the rollout and use of vaccines. There was a different, potentially more dangerous COVID-19 strain found in the UK, and that alone is not enough to have a negative economic impact on GBP. But what did add on to a negative economic impact was that led to other countries closing their borders and having flight restrictions with the UK, sorry, which that has more of an economic negative impact. Trump wants more. Yeah, Trump doesn't want to sign the 900 billion. Trump wants more. Trump wants something similar to the previous stimulus. But the whole point is that I'm trying to make is further economic stimulus from the feds to the government to the American citizens is coming. So that just shows me from an economic standpoint that a lot of these politicians and economists don't see signs of a recovery just yet. Even with the vaccines, we could still have a lot of uncertainty going into 2021, right? Brexit talks, no difference from this time last year. If you go into the Capital Hungry analysis channel here and you search Christmas Brexit, let's see if it comes up. Yeah, here we go. Let's see, search. So this is when I can't find the headline, but this is from December 20th area last year, where Boris Johnson was saying the exact same shit. He's saying this year, he's talking about Brexit being done for Christmas, blah, blah, blah. There's still a ton of uncertainty regarding Brexit. It has not progressed at all. Same bullshit as usual. And something else we want to keep an eye on from a macro perspective is the same way institutions have their rebalancing of flows from a monthly perspective, they also have this from an end of the year, end of the fiscal year perspective. So the monthly periods, the quarterly periods, and the end and the fiscal year periods have a lot of significance and importance in the economic world. So we just want to keep that in mind as we're coming towards the end of the year. As per economic events, any pre-planned news reports for tonight, we do not have any high impact economic data through London session that's going to be impacting UK or any of the Euro countries. Some of the economic data is going to be through New York session, which is the US initial jobless claims, Canada's GDP, US new home sales, and the crude oil inventories. So we are more going to be focused on market structure, price action, buyers and sellers strength, and of course the headlines to the left side of the screen, and being reactive with any potential negative or optimistic headlines alongside our technical confirms. And before we start jumping into our analysis, don't forget your mental reminders. As traders, our job is not only to focus on the technicals and the charting aspect or the fundamentals, it's also to focus on the risk management, the psychology side, and our own personal and mental development. So keep that in mind as well, and keep that in the back of your head. A lot of the times when I'm not saying there's going to be trades available tonight. It really depends how the market is moving and what opportunities present themselves. But a lot of the times on these streams, we call fairly decent trades and do the analysis ahead of time. When these trades play out, it can really cause a quick dopamine hit or an increase of adrenaline, where this can start impacting you negatively, right? It can start impacting your logical decision making process negatively. And same thing on the flip side for people who don't follow trading rules and they overtrade, over leverage, or rush trades. Losing trades can also impact your logical decision making process as well. So really focus on staying as emotionally neutral as possible and having as much control in your trading as possible, and keep that in your mind and keep that in the back of your head. Here are some quick stream reminders before we jump into the analysis across pairs. This is not financial advice or any signals, even though it sort of is. You can feel free to ask questions in the YouTube chat and Zoom chat, of course, about technicals, fundamentals, overall market, financial markets. Don't ask for direct signals. Any questions about the Capital Hungry private service, the Capital Hungry where you get access to the newsroom, access to all of our analysis, more active Zoom sessions. Keep that out of the YouTube. Just go to the Capital Hungry website. Currently, all of that is closed. Like we're not accepting new signups until the new year. Don't forget all of your free Capital Hungry resources, the free Telegram analysis chat, the free Capital Hungry News Twitter, the Capital Hungry YouTube channel itself, and don't forget to use these free resources to your advantage, okay? All right, so now let's get to the analysis here. Sorry, I just have the charts open on the 1 minute, but we're going to do some more intraday analysis first, and let's start with gold, okay? As gold peaked new all-time highs at 2075, very similar to what happened after the 2008 financial crash, you can see that it was heavily overextended, and those positional buyers from historical lows and during the rally up started exiting positions. After the heavy rally, we started to create some more higher time frame bearish market structure where we had stronger sellers impulsive moves and more corrective buyers moves. Corrective meaning either pullback phases, slower pullback phases, or consolidation phases that do not break structure. All right, so you can see that currently when we're looking at gold, and especially with our inverse correlation of the US dollar and gold, that short term the US dollar is getting bought up from its macro lows. So when we're looking at the US dollar here, it's been extremely bearish for an extended period of time, but it is having a bit of a cat bounce and a buyer's bounce from these historical lows that were created. And of course, the inverse correlation between the US dollar and gold is something we can use for our intraday bias, or even when we're looking at pairs such as EURUSD, USD CAD, GBP USD. It's more information we can use for ourselves as traders. So as the US dollar has gotten bought up from its historical lows, you can see with this upside impulsive move, it still was not enough buyers order flow to test previous highs or break higher time frame bearish market structure that has been respected since early August. We still have stronger macro sellers impulsive moves, and you can see once the corrective phases come to an end, sellers start to jump in the market. We're getting very strong repetitive rejection signs. So pretty much when you're looking at the seller's impulsive move, you can see we first peak a high, generate some liquidity, have an impulsive move and enter a consolidation phase, then have the next leg down where sellers create a new low, and we respect this market structure. We're currently in the phase of having that pullback after new lows have been created, and in this rejection phase, waiting for a break of this corrective structure to see the next impulsive leg down. So really, when we're looking at gold, especially as we're coming towards the end of the year with potential for positional gold buyers to exit positions, the potential for the US dollar to have more short-term strength, when we're looking at it from a macro perspective on the intraday charts here, as long as, and just creating some guidelines for ourselves in analysis, I can't see long-term gold buys unless we really come above 1900 and break this higher time frame bearish market structure and fail to break this corrective structure. So if we saw gold fail to break this structure and slowly creep up and break above 1900, that is easy buys, because you're validating sellers exhausting out of the market, and you're validating that break of structure to start retesting these previous highs and start making our way up, right? So I always like to zoom out the time frames, and of course in Capital Hungry we sometimes even start from like the 3-month chart, monthly. Why actually, you know what, it's a holiday stream, why don't we provide as much value as possible? So this is what I'm talking about. And it's actually a lot way better to see on the 1 month. So this, and this is fundamental and technical repetition. 2008, you have your market financial collapse, right? Global economies enter a recession, central banks start cutting interest rate, gold as a safe haven heavily increases its value, and you peak all-time highs. Do you see how after you peaked all-time highs, gold enters this higher time frame range of almost $200 an ounce and consolidates after pricing in all of that market fear? Now look at gold's current positioning. You had from about late 2018, 2019, trade wars, Brexit, potential Iran war, and COVID-19. Consistent market fear for a period of a couple of years as well as low global interest rates that led to a new all-time high peaked by gold. And now you're entering this potential consolidation phase that gold can play in for a period of months before either having the next upside impulsive move or repeating this if we enter an economic recovery stage. So now that all this fear has been priced in, don't be surprised if gold plays between about 1800 lows and these 2000 highs for a period of months, right? Just to generate liquidity as buyers and sellers on a positional perspective and institutions wait for that next extended decision. If we have that global economies after that period of months start to enter a economic recovery stage, COVID fades from the markets, right? Um, COVID fades from the markets, people start going back to work, economies start to recover. The safe haven appeal for gold is going to drop, and you're going to have this corrective phase, this pullback phase, where you can confidently play gold sells for an extended period of months with the sellers in the market alongside that fundamental catalyst, right? But otherwise, what we can evaluate as traders now is historically repeating, and fundamentally gold is in this stage. It's had its heavy rally, it's peaked all-time highs. A lot of the COVID fear fundamentally long-term and a lot of the overall fear has been priced in, and now we have the potential for gold to potentially play in this range for a period of months and play between these highs and lows before having its next move, right? So understanding that, I'm not looking for crazy long-term buys or sells. I'm looking to start playing this potential repeat of history and zoom in the time frames more now. Okay. Now, when we're looking at the weekly, very similar to, again, you're seeing this, right? See this? After peaking all-time highs, and you had this bearish market structure that kept retesting these lows until you had this higher time frame support form, right? And this, remember, was also a very similar fundamental catalyst. Even though it wasn't pandemic markets, it was still a catalyst, being the financial collapse that led to global recessions, that led to a negative ripple effect on economies. Now, same shit, different story, right? But the market impact for us traders is the fucking same. Okay, so anyways, now when you come here, what are you guys seeing? All-time highs peaked, bearish market structure developing, lows formed, right? And especially when we start zooming in the daily, we're coming to a retest area of a broken daily support, with potential now that if we have that correction, we're going to revisit these macro lows as a target point. That would be ideal for that historical repetition and technical repetition. Okay. Now, when we go to the daily time frame, and don't worry about any trades, we're going to be watching markets for the next like 2-3 hours, right? Just focus on increasing our knowledge in chart hours, right? So now we go to the daily look, as we dissect even more. That same bearish market structure, but we had a heavy liquidity zone around this area, right? A strong area of price sensitivity around the 1850s, 1900s region there, that we had a very clean break and a low created, and now this retest. that has yet to break above. And when we start to zoom in on the price action even more, we can see that this daily candle, and I'm not saying that it always has to happen, but when you guys observe, this is something I've learned through my few years of trading, is when you guys observe candle formations and how candles form on the daily time frame and higher, there's a high possibility that a wick will be created on both sides of the candle. Okay, it doesn't mean there's 100% probability, but I've personally seen it. 7 out of 10 candles that you count are gonna have wicks on both sides. They usually don't if there is strong momentum in the markets. Now, yes, gold is holding this corrective bullish structure, but this is a very, I don't know why that got so big, but this is a very strong rejection at previous highs that failed to break higher. This was a very strong bearish candle that at least broke previous bullish lows. We had this bearish candle come follow up, and now this daily candle has already pushed up to grab liquidity so far, but has yet to create a lower wick. And we still have like another, like what 14, 15 hours until this daily candle closes. So if we continue to respect this bearish structure, there's a lot of potential that this daily candle can close and flip bearish, right? Does that make sense? Especially if the US dollar maintains its strength and fails to and respects this bullish structure you can see on the 30-minute and continues up. There's a lot of potential for this daily candle to flip bearish. Something that can be a catalyst for this during New York is the US economic data. If that economic data gives the US dollar a short-term boost, there's higher probability our XXX pairs are going to go down as well. All right, so we may not see that until New York, but now we go to the 4 hour. You can see that yes, we see a lot of sellers. Yes, we see a lot of sellers pressure, but we can't deny this current bullish market structure that is being respected, right? So from an intraday perspective, if you wanted to take more of a day trade or a swing trade even, right? You would know that once we come below this price point around 1860s, 1855, you have an easy sell off to revisit these previous price sensitivity areas. All right? Currently, right, and that's just talking about if we had those confirms. Okay? So that's below 1860, 1850 with everything we're looking at, zooming down the time frames and that historical repetition, easy sells. But now I already have the higher time frame key levels here mapped out. These are historical price points. Let me clean up some of this previous analysis. So these are some historical price points based on monthly, quarterly, and yearly price data that you see great reactions to these key levels on gold across the board. We've been using these same key levels in Capital Hungry for almost a year now. These higher time frame key levels, historical key levels, have not changed. Okay, now yes, we see that higher time frame sell bias. Yes, we see it on the monthly, we see it on the weekly, we see it on the daily, but we aren't swing traders. We aren't positional traders. We can't deny this current lower time frame bearish market structure and the fact that gold is respecting 1855 key level and this bullish market structure and creating a support area here now, as well as this 4 hour candle, which is closing in about 1 minute, still failed to break these lows. So now let's start zooming in the time frames to look for what we would need for safe gold buys or sells. On the hourly, when we zoom in, you can see that this is that higher time frame bullish structure we're just going to keep an eye on, and we understand that we could have strong reactions there. When we're looking at the price action, you can see very strong reactions at the higher time frame key level 1855 and failure to break. We did have sells to revisit these lows, but you can see at these lows we're starting to get a mix of bullish and bearish candles that are showing us some sellers exhausting out of the market. Okay, so now as it's pre-London right now, and when we zoom in to the lower time frame to observe price action, the most refined, we are still in that sell bias as long as we maintain below 1868 here. Okay, so what I see for options on gold now on the lower time frame is you can't deny this bearish market structure that sellers have been respecting for like the last 16-hour period. And we can't deny this seller's exhaustion here as well. So I would only see safe buys on gold with this sequence of events. We have these 1 minute lows created. If gold comes up to retest 1868 and this lower time frame bear structure and these 1 minute highs where you've seen multiple rejection here and fails to break above it, that's high risk, high reward sells. You can only, and we would look to take those, and we would look to take those sells down to 1860, right? Dude, it's the holidays, there's no opportunities. But I made 30K this month and gold did a 500 pip drop like just a day ago. And if you were here from the start of the stream, you would know that that's already been said. You know what I mean? You're the rookie, I'm the vet. Just sit down and pay attention. All right. Anyways, so if we had that pullback to 1868 and failure to break that bearish market structure and these 1 minute highs, that would be high risk, high reward sells that we would look to target these previous lows, which is easily a 70 pip range down. You would not be able to extend those sells unless you break these lows and break the bullish intraday market structure as well. All right. And I would only see safe buys on gold if we break above these 1 minute highs, break the bearish market structure, either enter on the breakout or enter on the retest of 1868, failure to break lower, and we can see that there's more buyers momentum in the market and buyers order flow as we're validating the seller's exhaustion, and we validate this liquidity in order block as a buy side liquidity with the break of bearish market structure. Okay, so let's write that out to make it even easier. You're not a rookie. You've been trading for 6 months. Damn, bro. 6 months you've been trading? That's nice. That's 100% rookie, though. I don't know why you would say that. Huh? Yo, you guys, for anybody who's a OG in these streams, you guys can't say too much stupid shit because you will get roasted. But one thing is, we are traders here. We're supposed to have thicker skin. Don't take anything to heart. You know what I mean? We can joke around. I've been roasted. Everybody's been roasted. It's a part of life. All right. But does that make sense for gold? Gold is respecting this bearish structure still. We're primarily in that sell bias with current market structure, current price action, right? But the only way we're looking for gold buys is if we fail to break these lows. The fuck is this thing, man? Is if we fail to break these lows, respect bullish structure, and have a break out of these 1 minute highs and all of these confirms. Okay, I do not want to play this current range we are in. And I'd rather wait for these confirms. Higher risk sells, like I told you guys. Safe sells, less rewarding, would be obviously the break of the lows. Safe, less rewarding buys would be the break of 1876, higher time frame key level. And this current range is something we're not going to touch. This is a liquidity zone. This is a decision being made by buyers and sellers, and we're going to confirm that by getting our confirms. So now it's pre-London hours. Let's zoom in more. You can see we're getting a retest to these 1 minute highs. So let's watch how price action reacts there. But as we're letting gold develop and we still have another hour till actual London session itself, we are going to do the same top-down analysis now on GJ and our other pairs. So before we move on, does everybody understand the gold analysis from the higher time frame to the lower time frame? YouTube chat, Zoom chat, everybody good? We understand the dollar just has some short-term strength off its macro lows. Japanese yen standalone still holding some short-term strength. Global equities are starting to give some exhaustion at their all-time highs. This when global equities are giving exhaustion at their all-time highs or intraday highs, this doesn't mean that there's mass market fear, because we have to keep in mind we're coming towards the end of the year, so there's higher probability of buyers just cashing out of the market. Okay. When we're looking at our headlines to the left, we don't have anything too crazy significant yet, but just keep an eye on your headlines here, of course. And economic events, nothing overnight throughout the night, just the economic events and pre-planned data reports during New York session. The key fundamental points have already been discussed. The stimulus is still going through talks, but some type of stimulus is going to be approved over the next couple of weeks, whether it be 900 billion or 2 trillion, doesn't matter. It's just more debt from the central bank given to the government, given to the people, and an endless fucking shit debt cycle, right? So it's just an invisible debt prison, as sad as that sounds. No, there's no correlation between gold and Bitcoin. Ayush, there's only 200 people watching. I'll see your message, bro. You don't have to spam it like fucking 17,000 times, you fucking inbred. Holy, bro. There's only 280 people here, man. The chat's not going that crazy. You can just send your question like a normal human. You fucking donkey. All right. Anyway, so gold, we understand. We're going to be keeping an eye on that. We can see when we zoom in here more, we're just going to watch price action and the reactions at these previous 1 minute highs that we've seen a strong reactions here before. Not enough confirms just to sell just yet. I would still need more signs of rejection here because we still have the potential that we could break above. And these same confirms still stand here. So if we break above, obviously don't take any high risk sells, as we would not have the confirms needed for the high risk sells, and keep an eye on that. No, bro, the chat's not going this fast. All right. Okay, so we still have 50 minutes till London Open, so don't worry about that. Let's do our higher time frame analysis on GJ. Are you guys impatient? Do you just want me to do 4 hour down to lower time frame? Or do you guys want me to go from like the higher time frames and show you guys the possibility of historical repetition again? So you can see how it goes through the whole market. But probably most of you guys are gonna say no, because you fucking except for the CH members, but most of you YouTube chat might say no, unless you guys are aristocrats here. Yeah, okay, let's start from the higher time frame so I can show you guys more signs of historical, what the fuck? So I can show you guys historical repetition. All right? Very, very similar. Okay, ready? So see? So remember how I was showing you the potential for historical repetition on gold, right? You guys are paying attention? Everybody's paying attention? Now, 2008, I'd love to use any major catalysts that impacted global economies and the flow of money through markets when I'm doing my macro analysis. And one of the great catalysts that you can sort of compare to and relate to is the 2008 financial crash, right? So GBP JPY, and I'll explain. I'll break this whole thing down. I'm gonna give you guys a full timeline, even though I have a webinar on this anyways. So 2000, so markets were doing great. Everybody was gung ho happy, and then 2008 market crash. Why did this impact GBP JPY? It's because it led to a ripple effect of economic uncertainty across the board. Okay, and when you have GBP here, which is a risk currency, against a safe haven currency like Japanese yen, when you have mass economic uncertainty and fear, our safe haven currencies increase in strength. The US dollar, the Japanese yen, the Swiss franc, gold, right? So you had this massive sell off, and then these lows created, and for an extended period of years where you had still that economic uncertainty lingering on the GBP economy and global economies, you had price slowly respecting this bearish market structure and revisiting these lows and creating the support until years later that you had signs of economic recovery. Remember how gold rallied up, then consolidated for an extended period of years, then when economies rebounded, it did that correction. GBP JPY, which is a risk currency against a safe haven, on a macro perspective, did the opposite move, right? You had a massive sell off, a corrective phase, and this bearish market structure on the higher time frames for a period of years, and then this economic recovery stage. Okay? Now, Tiger Roll, you're new, you don't got years. Yeah, bro, we know. That's why you're gonna be, probably giving me a cheeseburger when I go to the drive-through high as fuck next time. But anyways, anyways, so then, so then years later, as we failed to break these lows technically, and we started to enter signs of an economic recovery stage, you can see that we had this rally on GBP JPY from 2013 to 2015, but this upside move was only a 50% correction of the impulsive move and did not go to retest previous highs and created a lower high, right? This created a lower high. At the same time, 2015, what was the next negative impact on GBP? What was the following catalyst? Brexit. For those of you who don't know, Brexit first hit the markets and hit the scene in around the 2015-2016 period. So there was not enough buyer's order flow or fundamental reasoning to have an extended move to the upside or further economic recovery to revisit these highs because 2015 Brexit came to the scene. Now, this is where the historical repetition comes. You had another seller's impulsive move that retested historical lows And similar to how you had this corrective stage in bearish market structure, what the fuck do you have happening here? Right? You had coronavirus and you had Brexit over the next 5 years, so GJ just slowly made its way down to revisit these lows. So now as traders, unless we have signs of economic recovery, any resolution with Brexit, we can't confirm this economic recovery stage until we have those fundamental catalysts and technical confirms of a break of this bearish market structure. Okay? So until then, until if there's no optimism regarding Brexit, if the second strain in the UK gets a lot worse, right? If the second strain in the UK gets a lot worse, if we have coronavirus leak into 2021 and continue to have a negative impact on economies, and if we don't have any break of this higher time frame structure, we are still in this area of historical repetition. We still have the potential for GJ to break this bullish corrective structure and revisit these lows before getting bought up and potentially breaking that structure. So do you see how you can have a very macro perspective that starts to show you buyers and sellers' strength and also has logic behind it? You're also comparing it to previous areas of fundamental and historical repetition, and you're seeing that price action and market structure was very similar as well, right? So if we break above, let's just say, and this is very macro, we're going to zoom in the time frames, we're going to find trading ideas for this session as well. Don't worry, don't spaz out. Most of you have the trading IQ, especially if you're new, especially if you're trading 6 months, most of you got the trading IQ of a fucking pig. All right, so I want to upgrade you guys to, instead of being a farm animal, becoming the farmer. All right, it's all good. We all start somewhere. We all start knowing fuck all. It's all good. Trust me. Anyways, so unless we get a break of this structure, unless we get optimism regarding Brexit, unless we get that these vaccines actually lead to COVID fading out of the markets, there's no fucking reason for investors to extend or look for GBP buys above and start to look for that economic recovery stage, right? So now when we further zoom in, YouTube chat, I love you guys, man. So now when we further zoom in, you can see that after this COVID crash, which was like March, April, and we had those historical lows retested, after that, central banks started heavily stimulating their respected economies. Shit, what the fuck is this? Just let me see these headlines. We have Brexit headlines here. They're still optimistic, right? They're still optimistic around a deal. There's still some serious issues, but they're still fairly optimistic. Just keep that in mind next. All right. So anyways, you can see that after the COVID crash and central banks started to flood their respected economies and inject their economies, we've been respecting this higher time frame bullish market structure. So we can't see those safe macro sells unless we come below 137. We come below 137, we can start to make our way down and respect that historical repetition fundamentally, that market fear, and start revisiting these lows. Okay? So yes, our higher time frame bias shows us that the market is still bearish. We have potential for that historical repetition, but we can't deny current price action, current market structure still being bullish, and that there's still a lot of mix around Brexit and short-term optimism. So we can't deny that this bullish market structure is being respected. We had a clean break above these previous highs in price sensitivity area. We are playing in this higher time frame range, and even with negative Brexit headlines, even with the second COVID strain being found in the UK, right? Even with all of this negativity, there was still not enough sellers order flow to break below 137 flat. Okay? So this is a very strong double bottom technically that shows a seller's exhaustion at a higher time frame key level being around 137 flat. And what we want to digest as traders is, even with Brexit being a mess, even with another strain being found in the UK, even with other countries closing their borders, investors are still not keen enough to have further shorts down. There's still not enough sellers order flow in the market to even break these previous lows, right? That's what we have to understand. So now when we start zooming in the time frames and that we still respected these lows, if we continue to hold some lower time frame bullish market structure and break above some of the bearish market structure in the lower time frame, we have potential to start slowly revisiting these highs. Okay, now let's go to the 1 minute here. After understanding that, you can see that you can observe price action and market structure the easiest on the lower time frames. We have been respecting this intraday bearish market structure as we had sellers create lows and then lower highs created, and then price enter this wedge from this low point. And once we had this lower high, right, and sellers jump back in the market, it was not as impulsive and it failed to test previous lows and creating this bullish market structure. Now, when we zoom in, we have broken above the bearish market structure, broken above this liquidity zone and price sensitivity area and above psychological price level 138.8 after creating this minor support and retesting the broken bearish structure. So when we're looking at GJ overnight, what would be most ideal for us for London Open would, for the next 30 minutes, if we could just continue bullish here, would be for London Open to get a retest at 138.8 in buys or a breakout of 139 buys on GJ here. Also, what we want to notice on the left side of our screen is we did just have some minor short-term optimistic Brexit headlines where the UK Housing Secretary said he is still reasonably optimistic about a deal. Okay? So now let's keep that in mind, that when we're looking at GJ, yes, we can reject possibly at this previous price sensitivity area and next psychological price level at 139 flat. But right now, we can't deny that we are respecting the breakout of bearish structure. We're respecting this lower time frame bullish market structure. And we are showing short-term buyers momentum. So what would be ideal is We still have 35 minutes till London Open, so don't worry about that. We'll check our other pairs as well. Okay, so does GJ make sense? The intraday is still respecting that bullish structure. Even with all the negativity, we could not break below that 137 point when we were looking at the 4 hour, even with all of that negative fundamental catalyst impacting GBP, such as Brexit uncertainty, the second strain of COVID, other countries closing borders. And we are respecting this lower time frame bullish market structure so far in the break of the bear structure highlighted. So we're primarily in a short-term buy bias and looking for either pullback buys to a retest of 0.800 or the squeeze above 139. London opens in about 34 minutes at 3 a.m. Eastern. I would only see safe sells really. I don't really want to play with this range here from below 138.8 to 138.6. Yes, 20 pips is a good scalping range, but it's not something I want to mess with because it doesn't look high probability to me, and there's a lot of potential to whipsaw in this range in the lower time frame as well. I would look for the safest sells below 138.5, validating price coming back below the bear structure, validating price also breaking the bullish structure and breaking key level, especially if we have any Brexit negativity come back on the scene. It'd be ideal to get this 30 minute to close above 138.800 PPL and the bear structure, and then see how the next 30, if that can retest, or the following London Open hour. But does everybody understand GJ analysis before we move on to Euro USD? Yeah. Okay. Cool. Gold is giving us very strong rejections as we expected at these 1 minute highs. The safest sells on gold, but if you could see that this order block is being created, so when you see something like this previously, the safest sells now would be either waiting for the London Open or selling at a break below these candle body lows. If you took a high risk entry here, you're only up about like 5 pips. You could set break even. This was the high risk entry area, but you have to be very cautious as we're just creating a bit of an order block and we haven't had a significant break of these candle body lows. So if we get a bearish candle below these lows, it shows me more potential to start squeezing down. But other than that, just be cautious that we're still waiting for London Open, and we aren't trading as aggressively anyways this week as it's just holidays. We're primarily doing this stream just for education purposes and to keep our chart hours up and to remain sharp with the markets. So yeah, but so far, you can see on the 1 minute is where you really see the reactions as significant areas of interest the best, right? So yeah, GJ, new 30-minute candles as well in another minute. Clean this up. Euro USD on the higher time frames is at a very, very, very strong decision point, okay, between buyers and sellers, because you've had a lot of buyers enter from this positional level and failures to break these previous lows, and a lot of liquidity generated from this area. But we're also retesting this very strong broken higher time frame support level where we had this impulsive break and previously could not break below that. This is, on the higher time frame perspective, the second attempt to break above this area. And from a higher time frame perspective, it's really going to take continued US dollar weakness and market optimism to break above this point and start extending up. When we look at the daily here, we are still extremely, extremely bullish and are showing more potential for upside potential, just as the US dollar, even though the US dollar, this is the US dollar 30-minute chart, right? It's not hard to see that it's getting a quick bounce from its lows, but overall, the US dollar is extremely bearish due to heavy printing of it from the Federal Reserves that led it to being oversupplied and under demand, right? So the US dollar is extremely bearish, and of course, on the higher time frame, this creates a more bullish bias on a pair like euro against the US dollar. So we can't deny how bullish the euro USD is. The mistake a lot of traders make is they start to call tops when there's no break of structure. Yes, you can have price start to enter corrective stages. Price can enter a consolidation phase, have a pullback phase, but unless that corrective phase and that pullback phase, sometimes it can last minutes, sometimes it can last days, weeks, months of a consolidation and fundamental indecision until the following breakout. So for example, this was the initial liquidity zone from these historical lows where you had an impulsive move to the upside to create highs. You can see price started to create this resistance, and but that is just the reaction behind the scenes of buyers exiting out their positions and sellers jumping in hand in hand to relieve them out of the market. This creates a consolidation zone and liquidity zone where you start to create some candle body lows, but those sell-offs and lows do not retest previous highs and do not break bullish market structure. So you can validate that this consolidation zone, even if it ran for another extended period of days, as long as it doesn't break bullish structure, as long as it doesn't break previous lows, you assume that it's buyer side liquidity. Okay, you can see that once you had the break to the upside, you had an extended push up where buyers created new highs and started to exhaust and close off positions. Now you enter another higher time frame range where this consolidation period lasted weeks, months. Yes, as intraday traders, you can play this consolidation range. You can play it alongside lower time frame price action and many other confirms with your intraday fundamentals as well. But when you're keeping your macro perspective and higher time frame perspective in mind, yes, you're seeing some sellers impulsive moves, but unless you break previous lows, or unless you go to revisit previous highs, or unless you break bullish market structure, this is all buyer side liquidity. Where when we finally broke previous highs, what did we do? Extend to a new high created. So now when we're zooming out, we have very strong bullish market structure where on a higher time frame, even and starting to get a consolidation zone created, where even if EU dipped a bit lower to like 1.20 flat, 1.195, on the higher time frames, I'm still extremely bullish. Right? Does that make sense? Especially fundamentally with the secondary in this pair being the US dollar, which is so heavily oversupplied and so technically bearish when you're looking at the market structure of it. Okay? So with that being said, now when we zoom in more, Now when we zoom in more, we know that even if EU breaks below 1.208, that is a nice 80 pip range down to retest that higher time frame bullish structure in previous highs around 1.20. Okay? Until then, all of this is still buyer side liquidity. You can see we actually had a liquidity zone here, an order block that we broke out of, created intraday highs, and now we're retesting it and failing to break below it, while the higher time frames are still quite bullish and the US dollar is overall high, on the fundamentally still bearish. Okay, if the US dollar continues bearish overnight, when we're looking at the dollar index here, right? If this continues bearish and works its way down to retest this structure, there's higher potential that gold will break out and higher potential that EU will also continue up. And look at gold here. See when I was telling you guys about the candle body closures? See how it's creating this little order block, an area of decision, an area of price sensitivity? You can't see safer sells until you see a clean candle below that order block. Because right now with the new 30-minute, it's created a lower wick. And if it breaks above these highs and we get an impulsive break above this price sensitivity area and a retest, we are adapting to this gold buy bias. Okay? So that's why it's very important to observe that lower time frame price action. And as we have not broken these candle body lows, if we break to the upside and have a clean impulsive break and retest, we're going to be adapting to this. But right now, we are just reacting at this price point still. A decision between buyers and sellers is being made. We're going to be waiting for the confirms to adapt to that decision and execute on it. And we still have London open in 23 minutes. GJ, slowly getting that pullback to 0.800. And EU now. So our higher time frame key levels are set. There's not too much market structure here to deal with, because when you come to about the 30-minute time frame, you're going to see that we've been in a bit of this range, but still respecting this bullish market structure, right? Safest buys on EU would be above 1.22 higher time frame key level. Okay, here this is looking like a much better rejection, and now the potential break here. So keep an eye on gold now. That's a much better rejection. Depends how this following candle. This is a very weak candle close. I need a stronger bearish candle close. But if you're still in your high risk entries, obviously if we have that break below, you can start to extend. We didn't get the break out or these confirms for gold buys yet, and we still have London open. We're keeping an eye on. So this was just that market structure we were highlighting based on the lower time frame structure here. You can see this was like when we had these lows created and sellers exit the market, and that pullback, this was the 1 minute high area. So really, essentially, as long as we stay above this bullish market structure and above these 1 minute highs, I am more in a bullish bias. I would only be looking for sells below 1.218. Okay. So obviously overall, EU is quite bullish, but we are in a bit of an intraday range on the lower time frame. We do have the potential to revisit these lows and dip lower, but I would only be looking for those sells if we break that intraday corrective structure. All right. London open in 19 minutes, so we still have some potentials to get some pullbacks and liquidity grabs at actual London open. So just keep that in mind, and it's best just to wait for London Open and just not trade aggressively anyways. Gold broke that structure. Yeah, but it's still it broke this little low, but it still is messing around in this price sensitivity area and liquidity zone. So I think it's best just to wait for London Open here. There's still a lot of price sensitivity in this lower time frame zone as well. Strong rejection though, still strong rejections, but unless you already have entries, it's best to wait for London Open, okay? Just because if you start to take a rush, let's just say we break these lows here, and like as a scalper, or like you took your entry, let's just say you took your entry at the break of this order block low, right? Yes, you can get your potential scalp in, or this already ran 10 pips, or you can get your trade entry in. But if you have this later entry, you don't want to get caught in a quick pullback at London Open that possibly retests these 1 minute highs, then rejects down again. All right. So just be cautious that, yes, you could get your scalp squeeze now. Yes, you can get your scalp squeeze now over the next 18 minutes, but just be aware of that actual London session open potential pullback and liquidity grab. Okay. GJ slowly potentially giving us this retest of 0.800. Euro USD trade idea stand as is. Before we jump to USD CAD and US30, I just gotta go to the washroom and fill up my water bottle. I've already been talking for an hour straight. Don't forget that we don't have any reactive pre-planned economic data reports overnight. We just have the economic data through, of course, New York session, which is the U.S. initial jobless claims, Canada's GDP, U.S. home sales, and the crude oil inventories. Don't forget about these key recent macro fundamental points as well that we have been discussing. The stimulus talks that are still active, depending on what the total amount of the stimulus is going to be, the mass vaccine rollout globally. Brexit talks are still actively on the table. You can see your real-time news headlines here to the left. And we're coming towards the end of the fiscal year. So, and of course, holidays. So we just want to tread carefully. Don't forget your stream reminders. Great free resources. The Capital Hungry Twitter feed posting headlines all the time, right? Capital Hungry free Telegram analysis channel, and the Capital Hungry YouTube channel itself, where you have tons of these live price action, live trading sessions, and of course, tons of other educational resources, webinars, and much more too. Technicals, fundamentals, psychology, and more. All free. Doesn't hurt to go watch. And last but not least, number one rule in trading is survival, capital protection, risk management, and staying as emotionally neutral as possible. Okay? So don't forget your mental reminders. We're just going to keep it on GJ for now, and I will be right back in about 5 to 10 minutes. Hopefully, you guys are enjoying the stream so far. If you guys have been watching from the start, this is more just for educational purposes and analysis purposes. As we're coming towards the holidays and the end of the year, I just was feeling a little bit nice and wanted to provide some value. Bored as fuck, to be honest, with the lockdowns and everything. Holy. But anyways, yeah. So I'll just be back, everybody. If you guys enjoy this, send a like, share it around with people. We'll be doing these more often. The set schedule for 2021 will be every Tuesday and Thursday, 1:30 a.m. Eastern start till about 5:30 a.m. Eastern. So twice a week, Tuesdays and Thursdays, every single week for about 4 hours. All right, for anybody who wants to come back next year, of course. I'll just be right back, everybody. I gotta go to the washroom before my bladder blows up. Any questions you guys have, any concerns, just share it in the chat. Not sure who loves himself the most, you or Raja. I don't know why you hate yourself so much. Like everybody should love themselves. That's not a bad thing. It's actually an issue that I think leads to a lot of personal doubt and depression about how much people hate themselves or how hard they are on themselves. I'm extremely difficult on myself. You know what I mean? Like I'm the hardest person on myself. I'm going to tell myself something before somebody else does. But I think some people don't know how to use that productively. So you should learn to love yourself, you know? But yeah, I'll be back. Ask any questions. All right, I'm back. Okay, we have 5 minutes till London Open here. GJ didn't give us a deep of a pullback to 0.800, but we still have London Open itself, which could do a liquidity grab. Otherwise, we're waiting for the breakout above 139. Same trade ideas still stand. Gold, same thing. It looks like we're just creating a quick little lower time frame support here, where London Open could still grab some liquidity to the upside and create its upper wick, then continue its way down. Same trade ideas still stand. CS, what was your question? Let me see this. Gold is a safe haven, meaning it will go up eventually, right? Gold will go up if we still have economic uncertainty in the markets, of course, going into 2021. So you want to keep in mind what fundamental catalysts you have at play. Since JPY is also a safe haven, does this mean GJ will go down eventually? Again, if you're looking at when we're talking about the historical repetition, if we still have COVID heavily active in impacting global economies, we still have Brexit on the table. We still have all these fundamental fear catalysts that decrease investor confidence. Then, of course, they're going to be moving their investments, their liquidity, their cash flow into the safe haven currencies or into safe havens overall, right? So, yes, if we have continued fundamental market fear in 2021, we have some Brexit headlines right now we just want to keep an eye on. We need the right deal, wants a deal, but he won't sign a deal that will damage interest. Nothing too crazy. Keep an eye into those headlines there. But yeah, if we have continued market fear and economic uncertainty that leaks into 2021 regarding COVID and other political issues, then there's higher probability, of course, that investors will be moving their money into back into gold as a safe haven precious metal and into safe haven currencies like the Japanese yen, which would lead to pairs like GJ, Euro JPY, AUD JPY going down. The one thing about gold of why it was so bullish during COVID was not just the. Sorry, we got more Brexit headlines here. What's this fucker saying? Still issues about fisheries. um, so one of the main issues regarding one of the main things a lot of traders overlooked or were not aware of why gold was so bullish during when pandemics first hit the markets was not only just because it's a safe haven precious metal. It's also because of the impact on the real supply and demand of physical gold, right? So you have to understand that when we had those massive lockdowns in March and for those extended period of months, this led to many gold mining areas, facilities, and production areas around the world being either temporarily suspended or being shut down. So the demand for gold, physical gold, was very high, but the supply was very low or is being limited, and the delivery of the physical gold is being very limited as well. So you had this massive one-sided volatility where the demand was extremely high, the supply was low, and you have mass market fear. So the price of gold just kept going up, right? That was one of the main reasons. A lot of people forget when they're trading that gold is a physical precious metal that is actively mined. It is actively bought by central banks, countries, and used for various purposes as well. So they forget about the supply and demand impact of gold and the economic cycles it has itself. Gold, to me, things such as um, the stock market, central banks, gold, oil are like major fundamental things to understand because they impact so many other aspects of the market. Okay, so it's London Open right now. you can see that gold just quickly created an hourly top wick here after having that rejection at that retest of structure. So if we break below these candle body lows, we should revisit those that low on the range we were talking about. But if you guys took that trade, if you guys took the high risk entry, you already got 30 pips. If you took the safer entry, you got about 20 pips as a scalp, right? So just keep that in mind and secure positions as scalps if you did take that high risk entry, as gold is still in this liquidity zone and price sensitivity area. And there's still a lot of potential for it to range. Also, when we look here and just drag this across the board, you can see that we just created a lower wick and didn't have a clean break below previous lows or price sensitivity area. So we might, if we fail to break below here and we break these highs, we might get our buy option as well. But that was just a quick 30 pips up and down on gold. Not much you can do about that. Euro USD, no safe buy confirms, as we didn't have this. Like if you're looking at Euro USD, this isn't even like 3 pips. So this wasn't a clean enough break above 1.21985. I think we would need a cleaner break above it to take those safer buys. Gold now, let's keep an eye on gold, because it failed to break these candle body lows, created a significant lower wick, didn't break this minor bullish structure, didn't even retest previous lows, and now it's reacting at the bearish market structure and previous highs. So let's just see if we could get the confirms we need for the safer gold buys. Right now, it's just reacting here. You can see where the candle body closed itself. Basically, for a scalp, if you were in these high risk sells, there's just that quick 30 pips, or the order block sells was only 20 pips, but it literally would reverse back to your entry or take you out break even within that next minute candle. And you can see that we still haven't had a clean break when you're looking at the candle body closures above 1868. So we're getting heavy reactions in this squeeze here. All right, so let's just continue to watch. What's GJ doing here? GJ hourly. And don't forget about the Brexit headlines. GJ hourly has already pushed up and grabbed some liquidity at these previous highs around 139. We did not get a clean break. Obviously, we just rejected it right on the dot. I would still need price to break above 139 to continue to see the bullish squeeze up to 139.2, or the better risk versus reward buys if we do a pullback to 0.800. So nothing to execute on GJ yet. Euro USD, same idea. Rejection at key level, no safe buys. Safe sells would be below 1.218 in the break of this bullish structure. When we look at the US dollar here, at the actual candles themselves, you can see the US dollar retested previous key level around 90.3 and is pushing up so far. So short-term US dollar strength, if it does go to revisit these highs, we'll have more confidence to execute on gold sells and Euro USD sells. But right now, gold is looking like it might give us our buy setup here with the rejection to the lower side of this order block. And if we can get a clean bullish candle close above the bearish market structure, then a retest to take those buys up. But again, nothing yet as we're reacting between these candle body highs and lows and around this price sensitivity area. And it's very crucial where the actual candle closes, right? Let's just zoom in though more so we can watch it better. So see how the candle bodies are almost closing at the exact same levels? It's very crucial where it actually closes. We need a stronger candle close above the bear structure and above that previous price sensitivity area for these confirms. Okay. So with the rejection at this lower time frame bullish structure and with this order block being formed here, if we do have a cleaner break above these highs, we can start looking for those gold buy scalps. USD CAD, sorry, that was just a trade from the private chat. It didn't run to the full range, but it almost ran 100. It did run 100 pips. It's a 4-hour chart, but we wanted to get that 150 pip range. Okay, this is looking a lot better. Okay, obviously no, I'm not entering up here, but this is looking a lot better now. If we get a bullish candle close here and a quick retest to get these confirms. Somebody's asking about US30. Yeah, let me break that down a second. Let's see if we start getting these confirmed. This is looking a lot better on gold here. To start taking some squeeze buys up. If we remain above this little order block after having that liquidity grab to the downside. Let's see if I want to get the retest at 68. But yeah, keep an eye on that. GJ, we're going to watch the reaction at 0.800. Euro USD, watch the reaction around 1.28. Otherwise, if we don't break this price point, we're just going to continue to respect this structure, but we're still waiting for either or of these trades. Okay, let's look at US30. And don't forget, we're coming towards the holidays. We're coming towards the end of the year. So be patient and wait for your confirms. Don't take any crazy impulse entries. Don't take any entries without confirms. We're still watching the markets for another 2 hours. If we don't get to execute on a trade, that is perfectly fine. All right? So just be patient and wait for those confirms that we had typed out. And if we get those confirms, we can start checking them off. Then risk some capital on the probability of that trade. Otherwise, if we don't get the confirms, don't force anything, and we still got to get in some chart hours, observe price action, and do analysis anyways, which is a plus for us. All right. Like gold here looks like it might just snap back in range, right? That's why I wanted to wait for the confirms. If we could start to get an order block formed here and come above 68, that's looking a lot better. But yeah, let's go back to, let's just break down US30. So US30, which is something that's very similar run on overall market optimism or fear, investor confidence or the lack of, right? You can see that similar to GJ, it has very similar structure. Now, this isn't because there's some correlation between US30. There's some correlation between US30 and the UK markets or the UK economy. It has nothing to do with that. It's because GBPJPY has the primary as a risk currency and the secondary as a safe haven. So when you have optimism, you have the secondary in that pair a lot weaker, right? And you have the risk currency a lot stronger. So that's why similar technical market structure is printed out. So overall, what we're going to review is you had at near these previous all-time highs, you had this massive sell-off move due to the COVID pandemic, obviously having a negative impact on the markets, and years worth of financial gains in the stock market wiped out, right? Wiped out. Almost like 5 to 10 years worth of financial gains wiped out, all the way down to like 18.5. Then the Federal Reserve, then the Federal Reserve started to inject the U.S. economy with mass amounts of U.S. dollars, of course, financial stimulus for banks, financial stimulus for individuals, financial stimulus and injections into the stock market, creating this artificial bullish stock market that even when people have lost, even when millions of people have lost jobs, even when COVID is still extremely rampant in the markets and negatively impacting, US30 has been extremely bullish, right? So we can't deny and don't want to fight the feds. But what we start to see here is we are at all-time highs and are getting a liquidity zone and consolidation zone, a reaction between buyers and sellers, right? As we're coming towards the end of the year, if we could get a cleaner break of this structure, this wasn't the cleanest break, and we failed to break these highs, there's a lot of potential for investors to exit out their positions out of the market and see a potential impulsive move down in a deeper correction to start 2021. All right. What's GJ doing? GJ didn't give that deep of a pullback yet. You can see similar idea. It respected these candle body lows, and we have that order block being formed, which we can assume is buyer side liquidity so far with the current bullish structure on the lower time frame. We can only take those buy squeezes if we get the breakout above 139 or the breakout in retest. So we're still keeping an eye on that. Gold, beautiful retest of the order block highs and the retest, like beautiful this, like we were looking for. Break above 1 minute highs, break above the bear structure, respected the intraday bullish structure, retest 1868. There isn't the crazy impulsive moves yet. It only went up like 10 pips and is still ranging around this price, like just like that. So just keep an eye on that still. Gold is moving for a scalper quite viciously, 12 pips up and down every candle. But yeah, keep an eye on that. What's this? COVID angry truckers. COVID angry truckers in English port of Dover push police officers and shout at police. Damn. All right, new 15-minute candles coming up. Just make sure we stay above 1868. If you have an entry, worst case, you get taken out, break even. Number one rule is capital preservation. If you get taken out, break even, you can look for another entry or just stay out. But don't forget, because we're coming towards the holidays and we're coming towards the end of the year, end of the fiscal year, there's could be a lot of different impact on volume and volume drops as well. Okay, so you don't want to get caught and some quick spike and not have your stop loss set, not be at break even, not understand what you are risking in the markets coming towards the end of the year and the holidays, right? Normal conditions, we would probably have stronger impulsive moves during the sessions, especially coming into the open. But with the timing, of course, don't be surprised if gold does just break back into range and start playing back in this liquidity zone that we were talking about. New 15-minute candle retested that same 68, still looking good. GJ still playing around. We're waiting for either this or this, only taking sales if we get a shift back in structure. EU, nothing significant yet. Okay, let's go back to US30 here. Sorry, I didn't get to answer any questions in the YouTube chat or Zoom chat? You guys just talking about random shit? Alright, cool. So even though US30 is at all-time highs, I wouldn't feel safe selling it unless it broke below 29,600 on the intradays. I'd feel a lot safer selling it from that point. Okay, so I'm still in a primary bullish bias on US equities. I think I can see investors still trying to squeeze out some profits back to intraday highs, probably until like literally the last couple of days of the month. Sorry, this was from earlier. We were playing that structure, but let's zoom out more. So you can see from this peaked sell point down to this area in pullback where we had some bearish market structure being respected, we do have some bullish market structure as well as price above 30K psychological price level and a break above this minor corrective bear structure. Okay. And this was the previous 1 minute highs from that pullback area. Primarily now on US30, I would be either waiting for the new 30-minute candle to retest 30K and then continue up, or the 30 to break out above this medium-term zone and price sensitivity area and retest and continue up. I don't see any sells on US30 unless we come below 29,900 on the lower time frame. Hey man, I was watching Paul's session and he said that I have bad knowledge and information. I don't think Paul said that. Paul's not that fucking retarded. I doubt Paul said that on stream. He's smarter than that. But Paul's fucking trash. Anyway, so Paul's fucking demo FTMO dog shit. Brickstone Live Leech. Alright, what's we got going on? GJ. Let's see how GJ reacts at 0.800. If we can get a just watch the greatest transfer of wealth webinar. Just all those buyers in the market for an extended period of years also had to exit out positions, or it impacted a lot of portfolios as well. But that's a big topic of conversation. What's going on here? Gold looks like it's gonna break back in the range. This is just we're not getting any significant of breaks of these highs. This is only 10 pips above 68. We're just starting to create an area of price sensitivity here. It's just starting to look a bit messy. You know what I mean? So I wouldn't be surprised if we break back in range here. So just keep an eye on that. Dollar's bullish. Dollar's bullish. EU. Oh, okay. EU sales are coming up and gold sales are coming up. This is not enough confirms for buys because the dollar is quite bullish, and this is starting to like I told you guys, look like it's gonna break back in range. Gold sells and EU sells coming up. GJ, nice initial reaction at 0.800 on the dot. Now we need either an order block and support formed here, or a bearish candle in a bullish engulfing, and then a quick little like double bottom pullback. And then we can get these pullback buys, but just be cautious of this. Just be cautious of this because we got some negative headlines to the left here. French European Affairs Minister says no risk of shortage on the products on the France side, but they are keeping the UK and France border closed. So let's watch the reaction at 0.800 and see if we can get a support form there. We obviously did not get a break of above 139. That would have been very high risk sells. EU, we're starting to get a break below the price sensitivity area in bullish market structure as we fail to break above the key level. Dollar is showing us some short-term strength after retesting our price sensitivity area. And of course, we broke the bullish structure in that 1 minute low point. Same thing for gold here. If gold retests 1868, that original point, it fails to break, or breaks below that previous candle body low point, we could take those 20-30 pip sells right back to revisit these lows. Okay, so possibly for the new 30-minute, but the buys aren't looking as clean as we're snapping back below these previous highs, and this was just a bit of price sensitivity here. We would really need to break above this order block to see scalp buys now. You know what I'm saying? So let's just keep an eye. Market's still fairly messy and choppy. So GJ breaking below 0.800, but I just want to see if it retests this previous price sensitivity area in broken structure, then comes back up. Exactly. This is not your typical holiday season due to COVID. So, like, look at this shit. Gold just going up and down 30-40 pips in like minutes. But still, like I said, I would only see the buys now if we break above this order block high. You know what I mean? This price sensitivity area high. Like that. But this reminds me of March when half the LPs took gold offline. Oh yeah, when it was moving like crazy and the spread was high. It is. Because if you're rushing entries here, that's like almost 20 pips up and down. Right? GJ, nice bullish candle close back above 138.8. Be ideal now for the 30-minute candle. I'm waiting for the new 30 minutes to see now on the, like, look at this shit. I'm waiting now for the 30. If the 30 on gold comes to retest these highs, these minor 1 minute highs, and fails to break, high risk, high reward sells. If it comes back below 68, medium sells. If it breaks below 67, safer, less rewarding sells. Let's at least go revisit the lows of this range. But right now, this shit's just going up and down, messy as hell. A new 30-minute candle in 6 minutes. That's why I was saying best to stay out of gold for now and just wait. EU, if the 30-minute can retest this structure and the previous 1 minute price sensitivity area here and still fail to break above, looks good. Dollar's still pretty quite bullish. In US30, we're either looking for the retest of 30K or the breakout above this previous price sensitivity area in medium term zone. Yeah, this stream Like I wasn't expecting too many viewers compared to our normal streams, which is done like obviously during prime market conditions, not holidays or the end of the year. This stream, we already came into it understanding it was more for analysis, learning purposes, and interaction. We weren't we were by no means looking to be aggressive or trade as we normally would. We're staying very adaptive to the timing of the market. Can you teach us mere candle concept like Uncle Ted? Why would you want me to teach you a concept that someone else has taught you? Does that does that not confuse you? You that's a concept you know or have heard from Uncle Ted and have heard him break it down to you and show it to you, but you want me to teach it now? That doesn't make any sense, you know? Ayush, you fucking Ayush, you're the same guy who was spamming before. You fucking retard, yo. Gold, see what I mean? Gold's just raping, like Gold's just raping mans right now, up and down 20 pips. Like we're waiting for the new 30. Yeah, I need food. Are you gonna make me some? GJ, if as this starts to break below 0.800, but it's doing that retest, we obviously didn't have enough confirms to buy there. We're waiting for the new 30-minute candle anyways. We didn't get our buy confirms above 139. We didn't want to enter any high risk sells. We didn't get our pullback buy confirms. I want to see how this 30-minute candle closes and how we react at potentially 0.800 again. If we stay below 0.800, then obviously be much more adaptive to the sells. But if we're just retesting the structure and pop back above, and then on the next 30-minute, we'll continue to stick to our bias. Safest sells are still below 138.500. Euro USD new 30 pulling back up to retest structure. Still nothing much going on. US30 hasn't moved much. When we're looking at global equities across the board, you can see that most stock markets have been in a bit of an intraday range, showing exhaustion at all-time highs as we're coming towards the end of the fiscal year, of course. A very nice retest of that lower time frame bearish market structure and failed to break below it so far. But still, we're waiting for the new 30-minute. If that possibly makes like a lower wick here, then price comes above 0.800. We'll still have our confirms we're looking for. We're already expecting to be careful due to Brexit indecision, so we weren't looking to rush entries on the pullback. We wanted to wait for our price action confirms, especially with some of the negative headlines you're seeing on the left side of your screen. Gold just messy. Gold just straight taking scalpers' souls over the holidays. That's why we're smart and we're waiting. And I told everybody to wait and stay out. EU, we're watching the reaction at the retest. It only went like 5 pips below for the breakout entry. 10 pips. But other than that, nothing too significant has happened yet. I would only be looking for gold buys at this point if the following 30-minute candle, which is right now, pushes down, fails to break the bearish structure, and then we get a break above 1869, then these buys would make more sense. Okay? So if the 30-minute candle now, when more volume is coming in, pushes down first and grabs liquidity or just creates his lower wick first, then pops above 1869, have a candle body closure above there, then those scalp buys would make more sense. GJ, it's doing what we expected so far, just with the 30-minute candle first pushing down and retesting this broken bearish market structure. Obviously, if we break below that, we're just snapping back in range, but I want to see how we react here. If we reject, snap back above, and potentially create the upper wick to revisit 0.800. I'm sorry, to go back above 0.800. But otherwise, if we remain below 0.800, we're gonna stay adaptive to sells. Just because we've had some of these negative headlines to the left, and there's still some indecision regarding Brexit, and we were being careful towards the end of the year anyways if we did break below there. Gold, I don't want to jinx it, but how the 30 created its lower wick and we're above the bear structure and we're above the 1 minute highs. If we break above 1869, we should get a nice, I think, about 20 to 30 pip scalp squeeze up to the upside. But that's only now if we get the candle bodies and price above 1869. Euro USD retesting that structure. The new 30-minute doesn't have much of a lower wick yet either. Let's just see how it reacts there. If it maintains below that structural point. Otherwise, if it snaps back above range or does a deeper pullback on the 30, I would still wait for price to come back below that sell area we were looking at. Overall, with London sessions so far, we haven't seen anything too crazy in the first 30 minutes. US 30 and futures, not too much movement. I just got to go to the washroom again. Keep an eye on gold if we break above 69 here. Keep an eye on GJ. That 30-minute broke back below bear structure, but it still has yet to create an upper wick. So this could just be a deeper liquidity grab, and then it flips bullish again. I'm going to verify that by if we get a pullback and how we react at 0.800. Hey guys, I'll be creating a YouTube channel called No Pips FX. No Pips FX. Where I look at charts and not take any trades. So like, are you going to be doing like analysis? Like, what do you mean look at charts? Are you just going to have a chart showing? Why is your analysis special? What's good about what you're going to bring to the table, if you don't mind me asking? Just look at it. That's it? You're not even gonna like say anything? You're just gonna have this chart streaming? Wouldn't that want to make people trade more? Wouldn't that want to make people overtrade more if they come and like just see this chart? Yeah? What? I thought you were trying to help them. I thought you said you're trying to help them. Oh, you're not trying to help them. You're trying to make them lose more money. Damn, bro, you're evil. I used 0.200, 0.800, 0.500 personally. Gold's at 69. Watch it. I don't want to jinx it because of that number. 1869 flat. Would I subscribe though? No, man. Why would I subscribe? I would just open up a chart if I want to stare at a chart. Watch gold if it breaks above 69 on those candle body highs, but if it closes below it, then obviously nothing yet. Did it break above? See what I mean? The candle closures are extremely important. It came right there to tease, then didn't break above yet. If you guys want to see some of the trades I've taken, you can come to this free Telegram analysis channel. You know what I mean? And yeah, you can see some of those trades taken and stuff like that. I usually like to secure profits as scalps and then let runners run. You know what I mean? You know what I mean? But now I'm not trading until mid-January just because it's the fucking holidays, you know? But yeah, if you guys want to see that stuff, if you want to see more information, that is in Sean, point zero zero, sorry, point zero zero flat, point 200, point 500, point 800. It follows similar to the quarter point theory, but those are specific back tested price points on GJ specifically that I've back tested through my own journey and seen great reactions at point 200, point 500, point 800, and point 00 between larger, higher time frame ranges. All right. But yeah, that's the free Telegram analysis chat. Is it $3 a lot for that Prime broker? If you set up a Prime account through the referral link, then it's $3 a lot. Yeah, gold's just messy. GJ, what's GJ doing? GJ, so that 30-minute created that lower wick. I want to see how it reacts at 0.800. Is the volume okay? We do a sound check. We do a sound check at the start. Yeah, it's really nice, eh? Like the structure points we look at in the lower time frame. Let me close this window. Let's go to the washroom quick. And we'll talk more and I'll answer any questions you guys have. Okay. Let's see if any questions in the YouTube chat. What do we got going on here? What are you fucking hooligans talking about? Refugee. What are you market refugees talking about? No pips. FX represent. I don't see trades. Yeah, I'm not trading till first week January. People looking for a trading stream here aren't confident in taking a trade themselves. They just want to be told and have something to look at. Pretty true. Streams are good to learn about trading habits and style, and from there you can make your own trading style and slowly execute on it. Good, very good point. Tell us more about runners. Um, oh, you mean running, like leaving risk-free runners? So if you're looking at some of the trades I was sharing, like in that free analysis chat that I took, what I mean is I primarily use the same concepts, like I 100% use the same concepts that I'm sharing with you guys on this stream and with other streams, right? So, meaning that I like to enter trades based on the 1 minute price action at certain areas of interest, and then of course secure some profits as scalp, like going for like 10, 20, 30 pip ranges. And once I secure and protect myself and secure some profits, because the number one rule in trading is of course survival and protecting your capital, then I'll set other positions risk free, stop loss and profit, and let them run depending on market structure and price action. Usually it will run for extra pips or just come back to take that trade out risk free, which is just a running position anyways after you already secured some. Because the market volumes and volatility aren't always going to allow crazy impulsive moves in the market. The market moves in waves. You have periods of strong impulsive moves, mostly usually fueled by fundamental catalysts, right? And you have periods of corrections and consolidations. So when you are a day trader and you scalp or you hold for intraday periods, you have to be very adaptive and reactive to the market conditions. If you're looking at the chart technically and you can see that price is in an intraday or lower time frame range, you shouldn't start to be looking for crazy 100,000 pip trades, right? You should be looking to play the markets accordingly of what you are seeing right in front of your eyes and digesting that information as objectively as possible without marrying a bias. You should also be flexible enough to understand when your bias is incorrect and when to milk out certain trades depending on market structure and price action if there's enough validation to hold trades. So for example, um let's just say GJ you were in, let's just say to visualize, you were in sales on GJ at 139, right? You can see we ran to the next psychological price level for about 20 pips and also broke a bit lower. Okay. Yes, we did not go to revisit these highs yet, but as we're observing price action, you can see that we just retested broken bearish structure and failed to break below it, as well as the 30-minute was just grabbing liquidity and creating its lower wick. So when you're observing price action and market structure, an issue a lot of people make is they might be in these sells and be in profit, but they won't secure or take any profits at that 20, 30 pips. They get greedy and expect the market to start to move 100 pips in their favor for no reason, and then end up getting caught with a lot of their profit being wiped out or price even coming back to entry, right? So what I'm trying to say is if you were in sells here, you can't extend your sells unless we had this low minor low created and a pullback to 138.8 and failure to break. Then it'd be higher probability to start extending some of your sells to the upside, right? And sorry, extending some of your sells as price moves to the downside, as you don't have any significant upside moves. So the observation of price action and market structure in real time and trying to be as objective as possible is extremely important when you are actively trade managing. A lot of people get emotions coming into play and start to marry a bias and ignore what is happening right in front of their eyes as per price action and the reaction of buyers and sellers. Okay. So this pullback was nice. You can see like on the 30-minute, it did what we were talking about and created that lower wick, and we're back above 0.800, our buy level. We're only about 7 pips above it if anybody took 0.800 buys for a scalp. One thing I'm seeing here now is as price is making its way up, these candles are starting to look a bit weaker, the bullish candles, and we're retesting the low of this order block. So don't be surprised if we see some buyers exit positions here and get a possible double bottom or a retest of 0.800 on the new hourly candle and then failure to break in continuation up. But if you're in those 0.800 trades as a scalp, just watch your risk accordingly. Gold, absolutely disgusting on the lower time frames. We're still maintaining and respecting bullish structure. We're still maintaining above previous 1 minute highs in price sensitivity area. We're still creating an order block and liquidity zone for a potential another impulsive move, but we can't execute on that trade until we come above 1869 with a candle close above there to take the next scalp squeeze to the upside. Okay. EU broke back above the bullish market structure. This little squeeze ran for 10 pips, but as the markets are ranging and fairly indecisive, we can even see the US dollar is still playing around here as well. And as we're coming towards the holidays and end of the year, we're not seeing any crazy high volatility moves. US futures, US30, literally in about like a set 10-point range here. But it's not like we were expecting anything because as traders, we were adapted and ready for these types of situations, anyways, ahead of time. Okay, so what are you guys talking about now? Any questions? Any questions? Or have I heard of Stacy Burke? No, I think he's really good. Stacy, dude named Stacy. No, I haven't. Sorry. Missed these streams. Have I roasted anyone yet? Not really. Been pretty nice. Haven't really roasted anybody yet. You're so bored. You started talking to yourself. Views on Bitcoin. I primarily don't trade Bitcoin. I have some overall general views on cryptocurrency, but not any like trade ideas for Bitcoin. Sorry. Yeah, best if you're new to focus on one pair. New hourly candle coming in. Let's see if we can get a squeeze on GJ and gold. I don't want to jinx it. Why do we call it a risk-free trade and not profit-secured runner? Just call it whatever you, I don't fuck, bro. What kind of, that's not even like a, that's just like a question about lingo. It's like I don't know how to answer that question. Sorry. That's just like I guess a question about what kind of trading lingo you like to use. Whether you want to call it risk free or profit secured runner. Um, Whatever floats your boat there. Do I wait for a retest? Personally, yes. Sometimes I'll take impulsive entries depending on the market conditions, but most of the time I like to personally wait for a retest. Yeah. Thanks, Kylie. Didn't Elon just try to sell Tesla to Apple or some shit? See what I was talking about here? How these bullish candles were starting to look weaker. So don't be surprised if we fail to break above this price sensitivity area that we get a pullback. And we have the new hourly candle in 5 minutes as well. 30s closing pretty indecisive. We're still respecting this corrective bullish structure. We still didn't break below previous price sensitivity area, but it's still looking pretty indecisive as per the potential close in 4 minutes. And with how this deeper low was created, don't be surprised if the new hourly comes to retest that low, then pop back above. But we're going to watch that accordingly. Markets are fairly messy. 0.800 just ran to 0.900. We haven't had too much go on overnight, but we weren't expecting too much. We're just developing our chart hours, observing price action, buyers and sellers strength, as well as the fundamentals. No economic data reports. All the pre-planned economic data is through New York session. Key fundamental points we've already discussed. And as per reactive headlines, pretty quiet night. Not too much to discuss there. We also have Asian session, like the Asian markets closing up in 1 hour at 5 a.m. Eastern, and potential for volume to even get slower through that as well, as we come into that overlap. Sorry, as we come into those hours of Asian session close in pre-New York and late London session. Holy, oh gold! Oh man, like even on the 1 minute here, this is the volume too. This is why we weren't forcing any trades, and we came adaptive. You know, we did analysis. We broke down these various pairs, so if we had those setups play out, we knew what to execute on. But with the conditions, that's why we weren't looking to force anything. Just messy across the board. And this, and for everyone who's been asking me, oh gee man, why don't you stream it during the holidays? Why aren't you streaming, man? That's why. That's why I was like, just be patient and wait until 2021. Just wait till January. You know what I mean? New hourly candle in 2 minutes. US dollar still fairly indecisive, fading out some of that intraday strength. Yeah, any questions you guys can leave in the chat. Where this hourly is possibly closing below 800 here the next 30 seconds as well. So if the next hourly dips down to retest these lows, then pops back up, I'll be more confident in running some scalp buys. Okay. Shit, gold. It's breaking above these candle body highs right before the hourly close. giving us a stronger bullish close here. Yeah, new hourly candle in 1 minute though. So if that does a pullback first and retest that, then flips bullish. So the new hourly candle, of course, like we were just talking about here, we ended up closing bearish from the previous hour as we couldn't close around like the 0.900 area we were at up here. So the following candle also closed below 0.800, but we still have to watch the reaction at this previous low and the retest of bearish market structure. I'd only be looking for sells really now if we broke this low and got a retest of 0.800. Otherwise, we're just gonna have a continued repeat of price bouncing off these lower time frame price sensitivity areas. Nice melt, okay, GJ, bro. It went down 4 pips. GJ's gone. GJ's gone up 10 pips, 15 pips, dropped 15 pips, gone up 10 pips. Like it hasn't done much. You know what I mean? Gold hasn't done fuck all. Gold's like holy. We never got the safe buys above 139. The pullback buys only played out for about 10 pips. Now we're watching this new hourly candle and how we react at these previous lows and bear structure. If we break these lows and get a pullback, like if we cleanly break these lows and then get a pullback to 0.800, I'd be adapting to sells. But otherwise, if we react at this bullish structure again and create a double bottom here, then come back above 0.800, this bias still stands as we're respecting bullish structure and failing to break bearish structure. All right. Let's watch how the candles actually close. Great. It's very interesting to see the reaction points as well in the lower time frame at like previous price sensitivity areas or retests of market structure or retests of significant price points. What do I feel like the outlook of 2021 will be in terms of the economy? I think this is a big snowball effect of all the debt that is building up from a citizen perspective and from a government perspective that is going to have a major that is going to have a major ripple effect on the economies to come. All these deferred mortgages, delayed rent payments, car payments, loan payments, credit card bills are going to add up, and there will be a major ripple effect, especially if COVID is not faded out from the markets and world by that point as well, and if we still have a lot of that negativity lingering. Feel me? So yeah, GJ, the hourly looked like what I was telling you. That like I was telling you guys, like the hourly higher potential that when we had this low created, that the hourly would revisit that low to grab liquidity. But now that the hourly's created its lower wick, we still need price above 0.800 to start looking to revisit 0.900 and then 139. If we remain below 0.800, we're gonna be more in a short-term sell bias, okay? But I do like how we're still above bear structure. I do like the rejection at these double bottom lows. I do like the respect to bullish structure, and I do like our original bias still holding strong so far. Okay. Euro USD sell bias only played out for 10 pips. Now after that quick liquidity grab, failure to break, and price snapping back above bullish structure, we might get our safe EU buys if the dollar breaks these lows and continues bearish, and that might also help our gold scalp buys as well. Okay, so if dollar continues bearish right now and breaks these candle body lows, EU buys above key level, we'll get a scalp squeeze there before Asian session close, and we'll also get a better gold squeeze here. I don't know if anybody took this gold entry, but it's only up 10 pips right now. A little bit less, actually, only 8 pips. But let's see if we can get a bit of a squeeze here. US30 is holding our buy area and retested it on the new hourly as well for this breakout play, and it is creating a bit of a support and price sensitivity area here too. It's just, of course, holidays, end of the year, volumes and volatilities are slow, so you don't want to force anything. You don't want to overtrade. If you are trading New York or observing markets through New York, keep an eye on these pre-planned economic events. Keep an eye on headlines regarding these recent fundamental points. Don't forget your mental reminders. Yeah, I'm falling asleep too here. What do we got going on as per these headlines? Oh shit. There you go. Finally. Fucking take. If you guys caught that 20 pips, man, fucking take that, man, before the shit ranges back down. Anybody catch gold? Above 1869, we're finally looking for. If you didn't catch it, don't worry about it either. This didn't play out. This actually played out first for people who are in these high risk sells. That played out first, this move. But then London Open, as we failed to break bullish structure and had this strong snapback bullish candle, we adapted to our gold buy analysis, created this order block above previous 1 minute highs, and then, of course, break above 1869. W's in the chat. Quick 28 pips, quick 20 pips. Euro USD, we might get a buy squeeze as well above 1.22. We're going to keep an eye on. Yeah, secure your scalps before the shit ranges back on you, you know what I mean? Because volume and volatility is fairly low and stagnant. So with these impulsive moves, you could see buyers start to exit out some positions, causing pullbacks. Did that make sense though, when we were looking for gold buys and why? Broke above. So no safe sells, right? This is higher time frame gold structure, bullish structure. This is lower time frame gold structure that was being respected, right? Previous 1 minute highs and price sensitivity area where we saw buyers exit out and sellers jump in many times. What we were looking for was a break above the 1 minute highs, check mark. Break above the bearish market structure, check mark. Respect the intraday bullish market structure, check mark. breakout and retest at either entry 1868, check mark, and we also adapted to 1869. Check mark, dollar weak overnight. Dollar's fairly mixed, but it is fairly bearish overnight after that initial impulsive move got waved off. So yeah, we did our analysis ahead of time of what we were looking for the potential scalp. We did our active observation of price action and adapting to the shift in buyers and seller strength. And we got the confirms we needed that we already pre-planned. Check it off. And then you got that quick 30 pips squeeze, 40 pips from 68, 30 pips from 69, minimum 20 pips. And if you guys also listen to me, I told you to exit positions and secure that, because with how gold is ranging overall and volume and volatility is slower, don't be surprised if we get a pullback to retest these candle body highs, then a continuation up at Asian chest and close. Otherwise, leave your runners running risk-free and follow the usual capital hungry concepts. GJ, not a clean break above 0.800. You can see the hourly. You can see that the hourly pushed up. Initially pushed down, grabbed liquidity to the downside, failed to break previous lows, then pushed up, only went 2 pips above 0.800. Then you had this bearish candle close back below, and we are still reacting at these previous highs and lows. But as long as we maintain below 0.800 or break below these lows, then I see scalp sells. Otherwise, we're just in this range here. Euro USD, we're waiting if we get these confirms. We are respecting lower time frame bullish market structure. The dollar is weak. We need a break above our higher time frame key level where we previously rejected. US30, these buys, they're not running for anything crazy. 25 points. Holy fuck, the markets are slow tonight. US30 is moving 20 points. Shit's slow. GU probably looks exactly like GJ. See? You had price peak these highs, sell-off move, lows created above the key level, and now price playing between these candle body highs and lows. So same shit, you know? Same shit as GJ. Why? Because you have a risk currency against a safe haven currency. In this situation, your safe haven currency is the US dollar. In this situation, your safe haven currency is the Japanese yen. But as per lower time frame price action and intraday market structure, if you go like this and you go to GU and you go to like this, and I zoom in more here too, and you go back and forth here, you can't really tell the difference, right? So very similar bias as GJ. But GJ is pretty messy. Gold, the buy squeeze ran a lot smoother. If you guys are still holding your runners, hopefully we can go back up to 1876. And for anybody who wants to rewatch this for educational purposes on what we are looking for gold buys and why ahead of time, you can always rewatch this too. If you took buys at 1868, you were good. And if you took buys at 1869, you were also good. Okay, GJ. Fucking really teasing us here. I'm starving. I'm getting hungry, man. You guys hungry? Yeah, GJ's just ranging, but it's not like we were expecting much. Blue balls? Oh, hungry, right? Yeah, yeah, hungry. Hooray for those who did not listen to me and kept gold. Well, what do you mean listen to me? If you listen, what? What do you mean? When I told you guys to secure gold and leave some runners risk free, was literally up here. Gold's at the same point where I told you to secure some positions and leave runners risk free. It's literally at the exact same price, right? Where I told people, hey, with the market conditions right now, it's best to not force more out of the market, close some and leave risk free. So if you close some here and you still have entries here and here, they're risk free, right? Because now if gold comes crashing down here in this 1 minute candle, you're gonna feel like a fucking idiot, Jeff. No, I'm just kidding. But yeah. So yeah, that's why. But as per like anybody, like as you said, who held, like I told you guys, when gold pushed up to here, I was telling you guys to secure some positions and leave runners risk free. And we're literally at the same price. Man acted like we were fucking at like 1875. I went back to gold. I was like, oh, I wonder what's happening. But it is looking good to extend your runners this next 15-minute candle. If it breaks these highs, then of course we can extend those running positions like we were discussing. Jeff probably only took gold buys because watching the stream. Otherwise, he doesn't have the confidence by himself. Euro USD, we're waiting for 1.21 key level here. You're never gonna see. The best part is you're never gonna see any of the haters or trolls to like stream themselves. They're only gonna ever be in the audience, creeping. That's the best part. That's what makes me happy. It's like this person, this person doesn't like themselves or they don't have confidence in themselves because they wouldn't be able to do the same stuff, you know. So when you already know that about a person, when you already know that a person has a lot of insecurities, they have a lot of self doubts, right? Or they like to hide behind fake profiles or they like to troll. When you already know this about a person, you got the power over them. Because whatever you do is going to piss them off. And they'll be watching everything you do. Jeff Bick's been watching me since 2019. Been watching me on Instagram, been watching me in trading chats, been watching me on social media. Since 2019, he's been actively spending time wondering what the fuck I'm doing and why I'm doing it. And I don't even know who he is. Think about that. Like that's why I automatically win. I'm living in this guy's brain rent free. And I don't even know who the fuck he is. I don't even know what he looks like. If he's actually a man or woman, what age. I have no fucking clue who this fucking person is that actively comes to watch every stream I do, that actively watches every single post I make, that's actively been watching me for a year. I have no fucking clue who this guy is, but he fucking knows me or thinks he knows me. Like, think about that, right? Think about how many trolls actively watch me or have been actively wanting me to fail. You know what I mean? There's a shit ton. You know how many trolls I have? A shit ton. And if you really dissect, like if we do some analysis on trolls, yeah, we like to roast and all that. Let me just check these. Nothing much going on as per the headlines. Yeah, we like to roast and all that, but what's going on? GJ's holding 0.800 now. Very nice rejection at the bottom for a scalp squeeze to the upside, but obviously don't force anything. So when you have someone who is trolling you, okay, you have to really dissect what this person is doing. Yes, everybody jokes and banters, but I'm not talking about temporary trolls. I'm not talking about TTs. I'm talking about just trolls. All right? When somebody is actively trolling you for a period of time, like I'm talking months, a year, do you know how fucking do you know how fucking like you know how fucking like shameful that is? Like what is this person's life? They're literally taking time out of their life to actively watch what I'm doing, think about it, be angry about it, be sad about it every single fucking day, every single week. And I have no fucking clue who they are. They're watching me be happy. They're watching me post trades making money. They're watching me post about capital hungry. You know what I mean? And I don't even know who the fuck this is. So think about that. Cyberbully? Fam, there's no such thing as cyberbullying. Cyberbullying is not real. You know how you end cyberbullying? You press the big red X, or you turn your screen off. You turn your monitor off. Close your eyes. Turn your Wi-Fi off. Fragile ego? No, my ego's way too big. My ego's way too big and well developed to be fragile. This is a very casual stream. Usually we got like 500 or 700 people. And I personally dealt with thousands of people, thousands of different types of people, different backgrounds, lifestyles, languages, and I'm way too comfortable and confident in myself to ever say I have a fragile ego or like any insecurities in that sense. Obviously, I got personal doubts, fucking get sad or shit like that, but like, come on, like, let's be real. It takes balls to actually stream and give trades out and give analysis and information, you know. And it is at the end of the day, it's not like this is like some closed off community. There's how many people are watching right now? 200. Every single 200 of you who are like probably on a laptop or computer, you guys can start streaming fucking right now if you want. You could literally exit my stream and literally start your own stream right now if you really want. You know what I mean? I don't trade risk currency versus risk currency pairs FX click like GBP against NZD, GBP AUD. They can be very messy when you have fundamental catalysts at play. I primarily like to trade pairs where you have a risk currency against a safe haven or a safe haven against a risk currency. So like GJ, Euro USD, USD CAD, where if you have a one-sided fundamental catalyst, you're starting your own stream in January. You're starting your own stream. You're starting your stream. I'm glad I inspired you guys right now to start your own streams. I hope you guys get millions of views, and send me a shout out once you get millions of views. Most likely, not to be a dick, just to be realistic, you're probably gonna do it for a week or two, then quit and have nothing to fucking talk about. Your stream name would be Capital Starving. No, but I wasn't joking. Like I mean, like just to provide like that reality that these opportunities exist for everyone. That you can 100% start streaming or sharing your analysis or posting your trade ideas or wanting to account manage or wanting to mentor. But obviously, you have to have the quality, consistency, and content behind it too, right? So you can't just pull a fucking protein Paul and play fucking elevator music and sit there eating food for fucking 40 minutes. Yeah, today's just a very chill stream. We just did analysis at the start. Gold buys played out. GJ buys are active. Like I was telling you guys, Euro USD we're waiting. US30 had this 25 point upside, and now it's coming right back. UN, are you talking about this? Honestly, Mr. UN, I am not the greatest expert of crypto, but what I do understand is a lot of these crypto fanatics think that in a cashless society, or as we're expecting to have a cashless society, um, they think that crypto is going to take over, right? All this crypto that already exists, like Bitcoin, XRP. And don't get me wrong, I worked at a major Canadian bank in financial tech before I started becoming before I was a full time trader. Like I just quit that job in March, and even then, and even when I was working there 2 years ago, they were already starting to adopt XRP, like Ripple, for international money transfers. Instead of using the SWIFT system for international money transfers, which most global banks use. If you guys ever heard of if you guys ever you guys ever do, I don't know if you guys ever done a bank transfer or a withdraw to a bank from a broker to your bank account, you usually need a SWIFT code, right? So that is the old method of international money transfer, is through this system called SWIFT that most global banks use, and they are trying to replace that system by using XRP, which is cheaper, faster, and more secure. So yes, the application of crypto is there, but you have to understand that the 1% will never let the control of money go to the 99%, or a go to a group that they don't already have control over. So what I mean by that is, yes, cryptocurrency is possibly the future because we're moving towards a cashless society, but that doesn't mean that the central bank isn't creating their own digital coin already just to act like the US dollar acts, right? Central bank, the feds, are already creating the US digital dollar, which is pretty much exactly like every single other cryptocurrency, except it's 100% provided, monitored, and distributed and controlled by the Federal Reserve, just like the US dollar is. And it's gonna be, the cashless society is going to be the exact same shit as current society, except as soon as they remove cash, they will have even more control over our money. They'll have every single thing will be monitored if you have only the US digital dollar existing, right? I'm talking about the US digital dollar created by the feds coming out. Anybody take GJ buys at 0.800 here? Beautiful little order block after we had these multiple rejections at the broken structure. and the hourly create its lower wick and price come above 0.800 here, you got 10 pips if you took that as well. I would like to go back to 139, but just keep an eye on that you got like 10 to 12 pips there. All right, gold is still active. Euro USD, Euro USD as well. Before we talk about the currencies, we got a nice little 30-minute pullback, failed to break structure. Looks like this 30, as long as the dollar is weak, which the dollar is fairly weak, we should get a nice Euro USD squeeze to the upside here. All right. So yeah. Anyways, what I was talking about is when the when the cashless society does come into play, you're going to have the Fed coin, the US digital dollar, take over, and that can actually drop the value of other cryptocurrencies. It's going to be a situation that we haven't ever faced before, and it's going to be creating history, right? Going to a cashless society. So the impact on other cryptocurrencies might be very mixed. But if the feds choose to create regulations that their cryptocurrency, the US digital dollar, is the only currency essentially allowed, right? And they have strict, and then they create stricter regulations versus other cryptocurrencies. Of course, that is going to create a negative impact, and of course, they are going to maintain control of the money system. So, taking control of the money system isn't necessarily going to come from just switching to cryptocurrency. We would really need a whole entire human revolution to change this privatized central banking system. You know what I mean? Until then, it doesn't matter if some new crypto comes out that's even more discreet, or some, you get what I'm saying? It doesn't matter. The feds and the governments will just stick their hands in it. They'll either regulate it, they'll either take it over, or they're going to make their own alternate version that's the only set version allowed, because they have the power to do that, right? So I'm not an expert of crypto in the sense that I day trade it. I am very well aware of its uses through my own through my own previous job, being in financial tech and just watching how XRP was getting used in banking for international money transfers. I do understand the security, discreteness behind it, the speed behind it, functionality, but um, it's still something that's very volatile, and I don't think is going to lead to overthrow. Like, there's too many crypto fanatics that think crypto is the solution to overthrowing all these banks and corporations and central banks. But like, come on, these guys have so much control. How are you really going to just think they're gonna let that shit slip out of their hands? You think these one percenters who have had wealth running through generations of their family are gonna let that slip through their hands after controlling the world for 100 plus years due to a fucking crypto fucking digital coin? Fuck no. We would need a whole human revolution, and obviously that's not gonna happen. But GJ buys W's in the chat, almost at 20 pips. We were patient. Did it not play out the analysis we were looking for? We were careful about this, right? But did we not get the breakout of structure, the retest of structure, multiple retests and failure to break, then price above our 0.800 with a strong rejection in order block above the PPL, and 9, 15, 20 pips there. All right. So that played out nice. GJ, if you caught that. Gold buys are still active. EU, not the cleanest breakout yet. Gold buys are still active. US30 still failed to break these previous 1 minute lows in this order block area. What's a Peter badge? GJ, it was extremely annoying, like the amount of times GJ, and obviously you can see, and one thing we want to see here is that this isn't meaning that GJ is going to have a massive sell off. It's just that at these previous high area, you can see that buyers who are in from these scalp lows are just exiting out positions. Okay, so buyers are thinking how we're thinking, that it's the holidays, volume and volatility isn't crazy. I'm not looking to extend trades on anything, and they're exiting out some positions. But as you exit out some positions and close scalps, don't forget to leave your runners risk free. Because if you have 0.800 entries here and you can just set it break even, obviously worst case the runner just gets taken out risk free, no harm, no foul. And if we just continue to play around here and then finally break above 139, you know you can extend your runners and also looking to scale another entry at the break of the highs, right? But as volume and volatility slow, you can see that after this quick little impulsive move, we're seeing some buyers exit positions so far. But we got these confirms finally. And that's why I tell you guys to secure some profits. I always tell you guys, is my instinct not always good when I say secure? This is looking nice. You know what I mean? We're back to the previous highs. I told you, man. And then just leave your runners. Euro USD, not the cleanest break above um, our key level. It was only 1 pip above. We still need that continued US dollar weakness and a break above this key level to see an impulsive move to the upside. GJ, we got the buy squeeze we were finally waiting for patiently after multiple rejections at these lows and finally getting an order block above the key level. Obviously, we retested previous highs, buyers exiting positions out, cashing out. Volume and volatility is slow, and we have 23 minutes until Asian session close. That's good to hear, Sergey. I'm just gonna go grab some water and be back in 5 minutes. Any questions, just leave it in the chat. We'll end this stream in like 30, 40 minutes, maybe even sooner because it's pretty quiet. Unless you guys just want me to keep you company overnight. Okay, GJ, perfect exit points. Gold, EU, no clean break. US30, nothing significant. Honestly, I think we'll be back January, twice a week. You're banned from Rakeel stream? What happened? How do you ban someone from a stream? You can't go in there ever again? Yeah, we're gonna be ending this stream soon. The next stream will be after the holidays, of course, in January. Then we'll be streaming twice a week. All right. So for anybody who is wants to study over, for anybody who wants to study over the holidays, you have all these free resources on the Capital Hungry YouTube. All of these educational webinars, live trading streams, price action sessions, technicals, fundamentals. You have the Capital Hungry News Twitter as well. It doesn't post as many headlines or as frequently as the news terminal to the left. That's only for the private members. And the Capital Hungry free Telegram analysis chat. If you want to learn more about the Capital Hungry private channel, which is currently closed but will be open again in January, late January, you can watch this video, Capital Hungry private channel introduction video on the YouTube page. So if you want to learn more about that, you can watch that. If you need a broker to use, like if you're like me and you just had your broker stop supporting Canadian clients and you need a broker to use, you can check out the link in my bio or the link in the description of this live stream. So yeah, Capital Hungry Twitter, Capital Hungry free Telegram analysis chat, Capital Hungry YouTube. More information on the Capital Hungry private channel, go to capitalhungry.com or click the introduction video. And if you need a broker to use, any Canadian clients that need a broker to use, you can also check out Prime Markets. Okay, okay. Stream reminders. Don't forget your mental reminders. News headlines, nothing significant. No economic data reports. We have economic data during New York session. If you're trading it, be aware. Other than that, we're pretty much going to call it a night here. 13 minutes until Asian session close. Honestly, I thought tonight I was only going to get like maybe 50 viewers, just with being so close to Christmas and the holidays and the end of the year. Oh, you like the Scalping 101 series? Yeah, it's a four-part series. I thought Wickstone Live Rakeel's not streaming until first week January. Isn't he on vacation? I'm pretty sure he's on vacation, no? Until first week January. Am I coming to the next Max stream? Yeah. I'm primarily just going to be focusing more on Capital Hungry YouTube YouTube streams in 2021. Dominion Markets, the Dominion Markets wants to do a partnership with Capital Hungry as well, where like if you trade on Dominion Markets, they're doing some Dominion Markets is doing something where you can pay for trading education with like different services and mentors through your trading commissions. So as you generate commissions through trading, I think a certain percentage of it gets saved, and then you can sort of use these commission credits to purchase like capital hungry for like a 3 month period, or to purchase market fluidity, or to purchase like some other trading course or service. So that's what, so they were, Dominion Markets was telling me to make a 6 month package for capital hungry for like $600 because it's already $100 a month. And to set that up with them where they would pay me a lump sum ahead of time for like a number of positions in capital hungry or whatever the way they want to do it. And then as traders develop their commissions and these commission credits, then they could use that and pay for capital hungry membership. You know what I mean? I don't know, it's a pretty cool idea by that broker. But I'm also recently an IB with Pacific Union. That's the broker I've been using ever since Vantage left in November. And they're just like their service, spreads, commissions, very competitive. Their client portals very competitive to Vantage and very similar to Vantage. And it's been great for me so far. So I have an IB link for that as well. But the more people that I get under that IB, the better. This, the one thing that this broker is offering is that the more clients I have under the IB, obviously the bigger fucking cut I make. But on top of that, the better service myself and all the people under my IB get as per spreads and the cost of commissions, right? I think if I get like 20 to 50 people under me, which isn't that much compared to the amount of people I know, like it already starts to drop the commission price. And like it's supposed to get us like better services overall compared to like standard accounts they have, the prime execution accounts. But yeah, it's 9 minutes till Asian session close, coming to 5 a.m. Eastern, coming towards Christmas holidays globally as well as the end of the year. So best not to be aggressive and force any trades. It was a nice analysis session where we got to break down the markets, discuss fundamentals and technicals, headlines, market structure, price action, buyers and sellers strength. It was also nice gold buys we got to capitalize on once we had our confirms, as well as GJ buys for 15, 20 pips. Other than that, with the volume and volatility being slower, we weren't expecting too much. You guys understand where to contact me or all those resources. So over the holidays, make sure you watch all the Capital Hungry webinars and the previous trading sessions, live trading sessions. It really will teach you a lot. And everything else. Yeah. So I'm going to see you guys later. I'll see you guys in January, okay? We'll be doing these streams twice a week. Zoom chat. Don't forget to rewatch the live stream for educational purposes. And I'll see you guys in the chat, in banter chat. Capital Hungry Aristocrats.